Good morning. Good morning. My name is Geraldine Harper. Yeah, I'm excited to be here for the Home Buying 101 presentation. And I don't see anybody in the chat as of yet, but as you do come into the chat, I would just kindly ask if you could in fact, just let me know if you can hear me. I believe you should be able to. But if not, please, please, please let me know if you're able to hear me or not. And I look forward to getting any feedback that you may have. Yes. Hi, Maisha. I see you. Can you hear me? Oh, great, great, great. Thank you. I was just getting ready to type you a message, just asking you to confirm. So I guess I'll take a couple of minutes. It's 2 minutes before 11, and then we'll get started as others come into the room. And Maisha, can you see my screen okay as well, my slides? So just let me know. You should be able to see my slides. Let's see. Mhm. Yeah, I'm just want to confirm that you can see my slides. Okay. Uh, Before we get started, we have about 1 minute. And we'll get started soon. Yeah. This is my very first presentation, believe it or not, online. So I just want everything, to go smoothly. And yeah, I'm really excited to get started here. Okay. Good morning, Gwen. Good morning, Gwen. I got confirmation. Welcome to Home Buying 101. I just received confirmation from my dear friend Maisha and colleague that she can hear me okay. I just wanted to make sure, Gwen, if you can confirm, can you see my slides okay as well? I believe you can, but I just want to just confirm before I really get underway here and that you can hear me. Oh, okay. Oh boy. Okay. So let me stop sharing and come right back in. Oh boy. I'm going to try to adjust my slides here. I did not want this to happen, but let me see if I can do this quickly here. All right. All right. Okay, how about now? Can you see them now? Okay. Okay, great. All right, welcome everyone to Home Buying 101. My name is Geraldine Harper. I'm a licensed salesperson with the name of my brokerage is Real Broker New York, based in Manhattan. I do live, however, in Orange County, Middletown, New York. And I do primarily service the Orange County, Sullivan, Ulster County areas. I do go into the city occasionally, but not that often. From the city originally, and I've lived up in the Hudson Valley area for quite a number of years, well over 25 years approximately now. So, yeah, I'm delighted that everyone is joining. So let's begin. I know I'm sort of restricted as far as time. I do have a lot of information to share. I want to leave enough time for questions. And yeah, so let's begin. Click on to my next slide here. Buying a home is basically a major milestone. It's a major effort. It does require a lot of time and effort, and being well informed and having a great team of not only real estate professionals, but including real estate professionals, lenders, attorneys, etc., will get you successfully through the steps and into your new home. I think it's best of, and I don't know how many of you are, and looking at the chat, if you've never purchased a home, I sort of crafted the presentation for those that may have never purchased a home or an investment property. So maybe you can kind of let me know if you're somewhat familiar with the process or not at all. It is Home Buying 101. So, the assumption was that many of you or some of you, probably are not uh, have basic experience. Maybe you've purchased one home or so, or not. So, but the course was sort of designed for the first time home buyer in mind. So bear with me, if I'm covering anything that you might be familiar with, and we'll embrace those that may not have, a great deal of experience or knowledge about the home buying process. And perhaps you'll come away with a couple of facts or points that you might not have considered that, will help you along the lines, especially if you're considering buying an investment property or a second home. So, having said that, I think the first, and I was sort of thinking about what the most important first step would be. And I think that this would probably, for many people, be somewhat self explanatory. But first, you should decide where you want to purchase a home and thoroughly research the area. For example, if you want to purchase a home in a neighborhood or an area that's or an investment property that is close or local to where you currently reside, drive by the area or not, but if you can get there, relatively easy through driving, just drive by the area of interest or neighborhood. You can always Google search statistics about your particular neighborhood, getting information on the demographics, the school systems. That's very important, especially for buyers that have young children. You also want to factor in the distance that is required. If you're purchasing a home or that would be used as a primary residence, you want to make sure that the location is conducive for your being able to get in and out quickly, or especially if you have a large family, an extended family, friends that, if you entertain a lot, etc., that's also, a factor for visiting. You want to make sure that you select a home in an area that would be conducive for you, commuting to and from work. I know, since we've been 18 months now in a COVID environment, a lot of people, even such as myself, have the option from working, to work from home, but I do go into my office occasionally. So, that said, it may be important to you, based on your tolerance level, as far as being sure to choose an area that would be, transportation friendly. Okay. So those are some of the things that you want to think about, before and do, before you, decide to purchase a home in a particular area. Okay. So moving on, just some basic housekeeping that you want to do in order to, assuming, and this is with the assumption that you are going to pre-qualify and obtain financing, which is of course getting a mortgage. Some buyers have cash and they pay cash for homes. That's fine. For those that have the ability to do that, but that on average, most people, will need to secure financing. So once you decided that, purchasing a property or an investment property or a second home is something that you want to endeavor to do, you should decide at that point to, well, once you decide to purchase a home in a particular area, and you should probably even do this beforehand. Take a minimum, and this is just for those that this would apply to. If necessary, take a minimum of 6 months to clean up, any negatives that could be on your credit history. Some people have pristine credit, that's wonderful. But life happens, and situations happen, loss of job, etc. There are many reasons why people may have negative blemishes on their credit report. So you want to really pull your own credit rating, and there's numerous ways to do that. I can get free credit report from through my bank. Sometimes that comes in, those little offers come in through advertising, especially if you have a particular bank that you do business with. Sometimes they're online, valid online offers to, get a free credit rating, you can achieve from the three bureaus. You can do that. And I suggest taking up to about 6 months to clean up your history if you need to. Also, more importantly, you want to decide who you will lock into a mortgage with. That's very, very important. Some people, if you're single, not married, then, obviously that's a non-issue. You just have to factor in yourself. But for those individuals that are married, or, if you are getting into a mortgage, even with an extended family, they should also, do the same thing, pull their credit ratings and clean up their history as well, if needed. And then lastly, you want to speak to, if you need to, a credit counselor who can assist you in identifying strategies to improve your credit history and, get any blemishes off of your report. So it's good. It's almost like having a physical exam once a year. You just want to make sure everything is in order. So we should approach our credit, with that same kind of, enthusiasm, for lack of a better word. So that's really important. And getting back to point number 2 on my slide here, it is important. It does really matter who's on the mortgage with you. I had a recent example, some clients, that closed on a house last month, as a matter of fact. And it was a couple, and they had 2 young adult daughters. The wife was not on the mortgage, but her husband was the primary mortgage holder. But they were initially going to have one of their adult daughters come on the mortgage, and she decided at the last minute not to, although she told them that she was going to do that when they first started out. But she decided not to join in with her parents or father on the mortgage. And instead of them being able to get a conventional mortgage, they had to go FHA. So, and then FHA mortgages are fine, and I'll get into that later in the presentation in terms of what that is exactly. But when you have someone that's either on or off, or decides to jump off of a mortgage with you, it can change the type of financing that you could qualify for. So that's really the point that I wanted to, to make there. So, just this, going out, when you're starting out, just make sure that you have your ducks in a row and that everyone that will be on the mortgage with you will be in agreement, to lock into a mortgage with you accordingly. All right. So moving on. Housekeeping continued. So once, you've decided which way you're going to go, who's going to be on the mortgage with you. The next steps would be apply for a mortgage. And I think I've mentioned that obviously I did, after you've cleaned up your credit history. It's prudent to have cash on hand that would be equal to a minimum of 15 to 20% of the purchase price range of the home you wish to buy. And that's for your down payment. The larger your down payment, if possible, the better it can look to a potential lender and a seller. I'm sure many of you are familiar with the term having more skin in the game. They want to be able to, that helps a lender gauge your ability to actually purchase. That's one of the qualifiers that they use. And then it looks good to a seller. It tells them that you possibly have, when you submit an offer, by the way, when you submit an offer to purchase a property, the offer will indicate the amount of your down payment. So you're telling the seller what you're going to put down, as a part of your offer and the language in your offer. So the more, the better. It just looks better in the eyes of a seller. Okay. So you want to make sure that you have, a comfortable cash position. And if you don't, it's very common for potential buyers to tap into sources, to acquire those funds. A lot of people utilize, as applicable, sometimes you get a cash gift or maybe an inheritance of some sort. You can utilize pension/IRA funds, of course, your personal savings. All of that is used and can be used as a down payment. And I just want to state that the source of your down payment has to be traceable. I'm sure for those of you that will be checking out by I think there are a couple of sessions on credit and mortgage lending. So I'm sure my esteemed colleagues that'll be running with those presentations could probably attest and affirm, to the fact that your source of funds that you'll use for a down payment has to be traceable. Your lender must be able to trace the source of those funds. So, but these are the more common ways that people utilize and secure funds to use as a down payment, for the purchase price of a home. And having said that, along those lines, you want to speak with your tax advisor as applicable regarding any potential tax liabilities that could result from payouts against your pension and IRAs. Whenever you make a distribution or withdrawal from an IRA, if you're using that as a source of funds, there could be tax penalties. So you can speak with your tax advisor, accountant, et cetera, regarding those issues, and then make your decisions accordingly. Mortgages also include closing costs. Closing costs is what I tend to call somewhat of an ugly beast, but it's necessary. It's crucial, and this is crucial because there are additional costs. Closing costs, as a definition, I should say, are additional costs that you will need to pay out of pocket at closing. All right, so you need to have sufficient cash to cover those costs as well. And on my next slide here, oh, sorry about that. Oh boy. My apologies. My apologies. Let me get back to where I was here. Let's see. Okay, let me get back to my presentation. My apologies. Let me get to the next slide. Hopefully you all can still see my slides okay. If not, let me know. Closing costs are typically by definition, well, I mentioned that it's just the out of additional funds that you'll pay out of pocket, at closing. And what they are specifically, they're typically between 2 and 5% of the purchase price. So you just multiply if you're buying a home or an investment property, for 300,000, then you just multiply 2 to 5% as an estimate, a rough estimate. That would be the amount of closing costs that you would have to come up with, in order to purchase a home before at closing. And the basic components of closing costs, and these costs do vary between state and local municipalities. And your lender will provide you the exact amount of your closing costs. So no worries there. But some of the more common, and this is just a basic, simplistic extract of what you could expect as part of your closing costs. Lender appraisal fees. Your lender will have to run an appraisal for the value of the house that you're interested in buying. And on average, that can be estimated. Those costs are estimated at about $200 to $300. Credit report fees, lender origination fees. That's what we call points. Some lenders charge a specific point. 1 or 2% of the actual mortgage amount goes as a fee to your lender. Title services, survey fees, attorney's fees. When you once you put an offer on a house, you're going to have to secure the services of a real estate attorney. Real estate in New York State, closings are handled by the attorneys, and some other states, the realtors pretty much do a lot of the write up of contracts and et cetera. In other states, that's allowed, but in New York State, closings are always handled by attorneys, and I kind of like that. I think that's something that attorneys should do and be responsible for. So you will have to secure an attorney. Okay. Underwriting fees, property insurance, which is called PMI. PMI is an amount that you pay in escrow. It comprises part of your monthly mortgage payment. And that's for those individuals who put down approximately less than 20% cash as a purchase price. So if your down payment is less than 20%, the lenders will require that you obtain PMI insurance, and you have no control over that. That's something that you have to be responsible for. And property taxes and school taxes. So up here in my neck of the woods, as they say, school taxes comprise a huge amount of, or can be one of the biggest components of your closing costs. So if you're buying in the Hudson Valley, you want to keep that in mind. All right, but this just gives you a basic overview of closing costs that are incurred. Okay. Mortgages, most common types of mortgages. And I apologize if I'm moving kind of fast. I'm into my first 20 minutes, so I want to at least hopefully have 5 minutes for questions. If I am not able to do that, please, I'm going to have my email address. You can contact me. You can get these slides as well. You can utilize as a reference point. And I promise you, I don't know how many people are watching this presentation, but if I get 100 people, trust me, I will answer every 100 emails. But just give me, be patient with me, but I will respond to your email and you will get your questions answered. So no worries there. Most common types of mortgages. FHA. FHA is a government-backed mortgage. It requires as little as 3.5% as a down payment. These mortgages are very attractive for buyers with limited down payment funds. Credit requirements are also a bit more flexible. Again, you'll hear me refer back to your lender. They will give you more specifics, of course. And by the way, I'm just a realtor. I don't have a mortgage background, so I just wanted to throw that out there as well. So that's why I defer to my esteemed colleagues that are also mortgage lenders. and who will be giving their presentations as well. And they can expound a bit more in depth, obviously, than I'll be able to. But this is just to give you a basic overview. Conventional loans. These loans are available to everyone, but a borrower needs stronger credit than what would be required for an FHA loan. So FHA loans and conventional loans are the most common, two of the most common types of mortgages out there. There are other features to FHA. If you want to know more about that, again, send me an email and I'll go into more specifics. But I just wanted to, for sake of time, wanted to just keep the definition sort of brief. Sonny Mae. Sonny Mae is a state of New York mortgage agency. Sonny Mae, I'm sure many of you may have heard of that program. These are low interest mortgage loans and programs that are given to help qualified buyers purchase their first home. So these are for first-time home buyers. And I believe if you have not purchased a home, even if you've purchased before, and it's been quite a number of years since you've purchased, I don't remember what the cutoff is, but if it's like 5, 10 years, et cetera, I'm not sure of the exact length of time, but there is a cutoff whereby if you have not purchased a home within those prior years, if you purchased again, you could also, would also be considered like a first-time home buyer. Don't quote me on that, but that's what I was told by a lender some time ago. But just to confirm with your lender if that's a program that you're interested in. USDA are low-interest mortgages with 0 down payments. You must use a USDA loan to buy a home in a designated area that covers several rural and suburban locations. So to put it simply, with USDA loans, a lot of people think that those are agricultural loans. It's a bit of a lesser known mortgage product. They're not for agricultural purposes. They are for buyers, buyers that are seeking to purchase properties. The beauty of this mortgage product is that you don't have to put any money down. However, they do have, credit requirements that you have to meet, and the loans are given in certain designated areas, which your mortgage lender can go into more specifics about that. And I also advise my clients, I said, ask your mortgage lender to give you some information about USDA, because at least as of a couple of years ago, that there were a lot of funds. These are also government-backed loans. And there were a lot of funds that, the government was holding on to because people were not applying for these loans. So, if it's out there, ask questions and look into it, because it could be something that could be beneficial, for you as well. All right. Now, here comes the question. A lot of people wonder, to work or not to work with realtors? That is the question. I just wanted to give you an overview since this is Home Buying 101. There are 2 types of realtors, buyer agents and listing agents. A buyer agent represents the buyer and works toward the buyer's best interest. The listing agent, on the other hand, represents the seller. The listing agent advertises the seller's property and works towards the best interests of the seller. A meeting of the minds, quote unquote, meeting of the minds, or quote unquote, handshake takes place when a buyer agent brings an offer from a buyer to a listing agent, who then presents that to the seller, who then accepts the offer. This begins the process of purchasing a home. So to put it simply, once your buyer agent submits an offer from you to the listing agent, he or she gives that to the seller. The seller reviews the terms of your offer and decides whether or not they want to accept it. That starts the process. Once they accept your offer, the process begins. Some consumers choose not to work with a buyer agent and will seek to work directly with a listing agent. So and I've had that happen. Some people will tell me, well, I'm just looking for the listing agent and want some information on a particular property. Fine. That's nothing wrong with that. their choice. Just beware in these instances if you select to not be represented by a buyer agent, because that is we have in New York State what's called dual agency. It's when you as a consumer are only working with one realtor in a transaction, and that realtor is usually, or not, sometimes not, that agent is working with the seller primarily. In other words, the listing agent has a contractual relationship with the seller. And if you approach the listing agent regarding information on a particular property with no buyer agent representing you or working on your behalf, that's fine. New York State allows for that. There's nothing wrong with it, but it's called dual agency. And you have to sign a sheet. You'll be required to sign a form acknowledging the fact that you are working with only one agent, which most likely will be the listing agent. And for some realtors, even realtors such as myself, that's not always the preferred way, because you want to not have divided interests. In other words, if I'm representing you, I'm assisting you in representing your best interests. If you choose to just work with the listing agent and let them work for you, bear in mind they are also representing the interests of the seller. So sometimes that can get a little bit messy, all right, especially if the deal falls south and it can, open up the door, a can of worms as far as possible litigation and things like that. So again, just to reiterate, while dual agency is permitted, it's not always advisable. And some real estate agents won't, work under those circumstances. Okay. And in other states, that's required. It's okay. It could be permissible. It just depends, on what you choose to do. But just if you're purchasing in New York, just keep that in mind. Benefits of working with a buyer realtor. As I indicated, buyer realtors, you as a buyer, are dedicated to your best interest should you choose to work with that buyer agent. Many realtors belong to such as myself, belong to a multiple listing service, which means that you have access, or I have access, you have it through me, to properties as soon as they hit the market. We also have can have key details about a particular property that a consumer would not know. For example, I'll know exactly when a property hit the market even before the websites, the Zillows and the Realtor.com picks it up through their feeds. I will know whether or not a property, especially in the Hudson Valley, because the market is so extremely active. I will know whether or not, because of the database that we belong to that's not open to the public, I'll know whether or not a property has an offer on it, even though it may not be indicated on the consumer website. So that's something that you want to keep in mind. Another benefit is that we can provide you with a market analysis so that you have information going forward in terms of what a house is worth in a particular market. We can assist you in preparing an offer that improves your chances of getting your offer accepted and assisting you with the negotiation process. That's very important. We have firsthand knowledge about the market in which you seek to purchase, if we specialize in that particular neighborhood or area, and we can spot trends very easily. Lastly, we can save you time by focusing on the type of property you want. A good realtor will do that. I do that all the time. I stay within my client's budget. I stay within their criteria as closely as possible. And I can identify properties within, not exceeding your budget. All right. So, okay. So you've decided, you've cleaned up your credit. You've done that already. You will apply for a mortgage. You know where you want to purchase a home, and you decided that you will or won't use a realtor. Now what? Well, I'll tell you what. Choose a lender and get pre-approved for a mortgage first before speaking to a realtor. This process will go much more smoothly for you. Make sure you obtain a pre-approval letter versus a pre-qualification letter. Pre-approval letter, just put it quickly, means that a bank stands ready to issue you a commitment based on the date of that letter was presented to you. A pre-qualification letter means that the lender did not do a deep dive into your assets. They probably didn't pull your W-2s or request your W-2s. They just took basic information from you over the phone and decided, okay, based on what you told me, you on paper, at least over the phone, you're qualified. Whereas a pre-commitment means that the lender has done their due diligence. They've checked your assets. They pulled you requested W-2s from you. They checked your credit rating, all of the above that's in line with their requirements. And they're telling you that they stand ready to issue you a commitment. So it's just some lenders use the terms pre-approval versus pre-qualification interchangeably, but there are differences between the two. So always ask for a pre-approval letter, and your lender will know what that means. Make sure you obtain a mortgage from a reputable lender. Major banks such as Chase, Wells Fargo, Citibank, pension union lenders, community banks. Try to avoid Quicken Loans and Rocket Mortgage, etc. They don't look good to some sellers. I've even had listing agents tell me that their sellers don't want to accept offers from people with Rocket Mortgages or Quicken Loans. It's not to disparage these companies. I've had people close with these type of mortgages, but in the past, there have been problems with these lenders coming through in terms of funding, a particular mortgage. And you don't want that. You don't want to you have your contract signed and get ready to close only to find out that your mortgage lender can't come through. So it hasn't happened recently, but that has happened, years gone by. So I believe some sellers still are a little bit averse to that. So you just want to present an offer in the best possible light. And that includes having a mortgage from what the market deems as strong or reputable lenders. Reach out to a licensed realtor covering the market you wish to purchase in. I've covered that. And give them your search criteria. The more specific you are, the better. Don't just tell a realtor that, oh, I want to live in, let's see, I want to live in, all right, Middletown, where I live. I want a house large enough for for my family. How many bedrooms do you want? What part of Middletown do you want to live in? Do you want to live in a specific school system? Which brings me back to my first comment. Research the area, know where you want to live, because we're not mind readers per se, but as a realtor, but you really need to try to be as specific as possible. Lastly, seek to build a working relationship or a rapport with your realtor. Don't be afraid to ask questions, and don't think that because we ask certain questions that we're trying to, maybe be a little bit nosy. No, certain questions we need to ask because we know what could be in the mind of a seller, and the goal is to get you the house that you want. So, and we need to know and be comfortable also that when we submit an offer, on your behalf, that you're going to come through. All right. So it's just reasons why, but try to build a rapport and be, not be averse to asking questions throughout the process. Now, congratulations. Assume you got your offer accepted. The funds begins. Once you get an offer accepted, you'll need to have a property inspection. This is the rest of what you would need to do. And this is, my focus is on New York State, by the way. I'm licensed in Pennsylvania, but the bulk of my business is in New York. So this is the basic cycle of real estate purchasing, the steps that's required as it relates to New York. So once you get your offer accepted, you'll have a property inspection completed. Before the inspection is scheduled, you should secure the services by this time of a local real estate attorney. They should be local, because they know the area very well. They don't necessarily have to be. You can use a friend or a relative, whatever, who may not charge you. That's fine. Just make sure they're familiar with the area and that they are a real estate attorney. Okay. After the home passes inspection, purchase contracts are drawn up usually by the seller's attorney, and they will be delivered to your attorney for review. Once the seller's attorney and your attorney agree on the terms, the buyer will deliver the deposit to their attorney, and funds are to be held in escrow until the day of closing. The buyer's attorney will also run a title search on the property. Also, during this time, the mortgage lender will begin the full underwriting process and will order an appraisal of the house. And once the lender completes their underwriting process, the loan is finally approved and a closing date is set. So that's it. I just wanted to also, Maisha asked me to appear on a panel, and that's around 12:30. So we'll also go into some areas because I'm really basically out of time, I think. So 2 areas that are trending.
Yes.
Okay. I'm out of time.
Yeah. No. But you can keep going. I was going to give a 5-minute warning, but at the same time, I'm learning too. Believe it or not, some of these things. So I'm gonna just say 5 minutes, or actually we're at 3 minutes, and let you finish, and then hopefully people will come back to get more of this knowledge at 12:30.
Okay. Yeah, I'll just, I'm practically finished with my slides anyway. Orange County is extremely popular area for the last 18 months. The growth has been exploding as far as due to COVID, people coming from the area, from the city, primarily Westchester, Brooklyn. I've had a couple of clients that, for some reason, Queens, this area is very popular with residents from Queens. I think a lot of people have been priced out of Long Island, so they view the Hudson Valley as like one of the last areas, where they can come and get, a moderately priced home, in a commuter friendly location. Although, once you live north of Rockland, your commute is going to be about 2 hours, especially if you commute from there to Manhattan, by public transportation, and factoring in traffic. Even your driving time will be about 2 hours, 90 minutes to 2 hours, depending on where in the Hudson Valley you're moving. So keep that in mind, but it's still a very, very extremely popular area. A lot of people are moving up here. I've always sang the praises of Sullivan County. I do have clients. I've sold once in Sullivan County, and I do show quite frequently up there now. That is not a commuter-friendly area, but it's very popular with buyers seeking larger parcels or who want acreage for a variety of reasons: hunting, farming. Some people want privacy. I've had doctors, professionals, just people from all walks of life seeking property in Hudson Valley and Sullivan County. So obviously they know something we don't. Sullivan is called a right to farm community. And in addition, many buyers seek properties to rent out as Airbnbs. Right now, there's no mandate for whether or not, or restrictions or rules for having Airbnbs in Sullivan. But I was told that there were discussions from the towns and the local government, they're probably going to put some rules in place. But Sullivan County is a beautiful county. It really is. And it's not conducive, again, for commuters, but it's really ideal for those who just want some land. They want to farm. Maybe they're thinking about retiring and interested in maybe getting a property to rent it out as an Airbnb or as a second residence. And maybe with the end result of maybe retiring there. And again, anybody interested in farming, Sullivan is right to farm. There are farms there, and we'll talk more about that during the next session. But so that's it. I don't know, Maisha, do I have time for any questions? Probably not.
Well, the session we're about a minute over, but that tells you how much knowledge Miss Geraldine Harper has. She's an experienced agent, and not only New York, but also Pennsylvania. And so she deals with everything from, I'm sure, just vacation properties to actually full-time properties. And she's very busy. So hopefully people will come and join us for the 12:30 panel, and then bring your questions there.
Right.
Because I'm sure they have them. I actually see one in the question and answer, and it was about the pre-qual versus the pre-approval, which is better, which you touched upon. So if you bring your questions to the 12:30 panel, we will be able to discuss them in more depth, and hopefully they'll have retained all this awesome knowledge and bring in questions with you. And also, is it okay for them to reach out to you to LinkedIn
absolutely.
or whatever?
Yeah, absolutely. I don't really, I'm sort of a little bit of a dinosaur. I have to really get up to speed with social media, but I have my email address here. Please, everybody, feel free to use my email, hopefully you can see it on the slide here. And like I said, bear with me. I promise you I will get your questions answered. If I don't get back to you right away, just know that I see it. If you sent it to the right address, I'll see it. And you can also have my slides, which has my office number on there as well. So you can email me for a copy of these slides and make them your own. You can add additional notes, cross out what's not applicable, and just, make your own little guide out of this. So that's fine as well.
Amen. Amen. Thank you so much, Ms. Geraldine. Wonderful information. And I know some people will be contacting you.
That's fine. That's fine. The more the merrier.
All right. And so if we want to direct everyone to the networking, and then the next panel starts in a few minutes. But if you want to jump in there and just try to network as best you can between then, that's fine.
Will do. Thank you. Good luck, everyone. Well, blessings, everyone.
Everybody, take care.
Mm-hmm.